Hello and welcome back. Hope you're good, doing well. So hopefully you can hear me, guys. Sound is all right on your end and safe. Okay, so let's start. Let's move on for this weekly market outlook. Before going to look at that, if anyone want to join for training or trade setup, just simply visit wave-trader.com, check the membership levels, and you can just simply select from there, or if you are looking for further information, just simply fill this form and send that form to me for further information. All right, so wave-trader.com, or you can visit the techtradingacademy.com. All right, so now let's look at the news. So news are just simply breaking out. We can see that problem is going on in the Middle East. There, Israel has just declared war, and there is a great risk for third-party involvement. All right, there we can see that the Russians are saying that the Kremlin commenting U.S. fleet movements. There is a big risk of third parties involvement in the Israel-Palestinian crisis. So this is the risk. If that happens, then the conflict is not going to be Israel only, right? Then it can spread into the other areas in the Middle East region, right? So specifically, the party which we need to look at that is the Iran, right? So how Iran is going to do that, all right? How they are going to Iran and Russians, all right? These two parties are going to be important. So they are going to do that. So we have seen movements specifically on the after that event. We clearly can see that the Tel Aviv 35 index just dropped significantly. We can see over there that the drop is almost 7%. All right, so more than 7%, close to 8%. We have seen that significant drop over there on Israel indices. All right, this correction which we were having over there, a weekly correction, is just open with a huge gap, and the price just is testing this previous low. We got a huge gap, and price is just testing that low. So no, there is a risk for the rest of the equities to follow that, right? There is a risk, as I said, that if the conflict spread to the other areas, other part of the region, specifically the other Middle East countries, if they are going to involve like Iran, Misr, or Syria, right? So if Syria is going to involve, so specifically Russians, you guys maybe know that the Russians are supporting the Syrian regime, all right? So, and if Syria is going to jump in, then obviously means that the Russians are behind them, like US is supporting Israel. So this conflict can be regional. Then that's why the news are just breaking out and saying that there is a risk. So there is a risk, all right? There is a risk for the regional crisis, right? Third party involvement risk exists over there. There we can see that. So that's why if that happens, right, then we may see drop on other indices, on other equities as well. So like if I'm going to open the US indices can go down to like that. So we are having a similar kind of strength over there, since we have a 2020 crash over there on the indices. So there we can see that the crash started from there. We were looking for buy over there on the Nasdaq 100 index at that time, if you remember. All right, so we got a huge nice bullish leg over there, So since then we can see that the Tel Aviv 35 index was rising. All right. So similarly, tech stock on the US indices was also rising since then. All right. And then what happened? Both went into a weekly correction there. Okay. And then we have seen this weekly wave appeared over there, which was heading towards that previous high, this previous high on the Nasdaq 100 index. And but what happened suddenly? The conflict started, right? The war started, so we have seen quick drop over there. So there is a risk, as I said in the previous weekly market outlook, for this one more leg lower all the way back to this previous low. Okay, and as I said, that if conflict is going to be erupted in the other parts of the region, okay, then indices may feel that pain. Okay, there is a risk for this to go down all the way back to this previous low. Okay, that's the point which you need to understand. That so we may see more downside on the 35 index, all right, on the Tel Aviv 35 index, and that can drive the US indices, the European indices all lower. So make sure you understand that. So that's why news which are just breaking over there, they are very important to watch what's happening over there, which country. So right now we are having, before that Russians were not commenting on that, but since US sent their their carrier over there, right? Since then Kremlin is also taking that seriously. All right, so Kremlin, there is a great danger for the wider region from events in Israel. So there is a risk that can spread on the other part of the region, and that can cause the other indices to or other assets to feel that pain. So right now the pain is just in the Israel stock is just falling. Their currency went lower, all right, but we are having some movement on the other assets like oil, gas, natural gas is just pushing higher, yeah, and some movement on the indices, on the other indices, but not bigger enough. So that's a risk over there, right? So I'm trying to find a carrier. The US has just recently sent that carrier over there, so there is a risk, right? So make sure you keep eyes on that. So let's move on. Let's look at the other assets. All right, so that's the event which is causing the panic in the market. All right, now let's look at the other assets. So dollar index, we're gonna look at the dollar index. So but before let's look at these updates first. All right, so copper is just simply going down, but the move is not significant. Move is slow all the way back to this previous low. So we're expecting it to just continue to keep dragging lower. So I do have update. We got a breakout. We were expecting breakout happened. Move was slow. All right, this breakout happened. Price was holding those daily moving averages. Okay, now we are looking for this to pull back within the daily moving averages, and that trying to continue to keep dragging lower all the way back to that low. So copper, Australian dollar, we got some movement. All right, so last week we were expecting this to go back up. All right, so the chart which is more relevant is this this one. All right, so we gotta move all the way back to the high, and then we gotta drop. All right, so we got that move, this move all the way back to the high, and then we got a sudden strong sell-off last week after the as I said in the previous week market outlook, that we may not see rate hike from the Reserve Bank of Australia. So they did not raise the interest rate, which caused the Australian dollar to go down, and also the Fed. All right, and that move, in the previous weekly market outlook, we were expecting price to just go down up to this previous low or all the way to the new low and then go back up. So we gotta move. All right, so after forming new low, we are going back up. So again, we are at the bottom looking for a risk on move to happen. But in case if that event, all right, the event which I have just is just developing over there, so news are just our news are just developing over there. So if that erupted into the other part of the region, then risk on currencies is not going to do well. They're gonna be a pressure on the risk on currencies. Then we're gonna have strength on the dollar, and indices gonna go lower. So simply safe havens gonna rise, like gold, silver, yen, or bonds, right? So other safe havens, so they gonna, or dollar, they gonna rise. So when you are buying, looking for buying again these charts for upside, make sure you understand that what's happening with the other assets, and what's happening with the event. All right, so similar thing is here on the New Zealand dollar, US dollar. So we got a move up and then drop. Sharp sell-off came over there, and then we were expecting it to go back up in the previous weekly market outlook. We got a nice move up. That move is just simply happening for upside. All right, so just continue to keep rising. So explained this chart last week in the weekly market outlook with so much detail. There is a divergence between the dollar peso and dollar rand. So setting up for next run all the way up to that high, right? So we need this at least 4-hour time frame correction to happen over there. So very much similar like these kind of a bottom over there within these trend, the trend which is just simply appearing over there, correct back within that trend and break out, continue to keep running for longer term for upside. This is a 4-hour time frame chart, and the commodity index. All right, so commodity index is setting up for a next wave to the downside. As we can see that the copper is going lower, so copper dropping, and this is also going lower, copper dropping, wheat dropping. All right, or other commodities, they are dropping, and commodity index, this Goldman Sachs commodity index, so set to drop all the way up to this previous 520. Right, so once it will continue to keep dragging lower all the way up to 520 at 20. Yeah, so oil also gonna continue to keep dragging lower. So right now, it is not making sense to sell the oil. Yeah, the event, yeah, so the event is in the Middle East, oil is coming from the Middle East, and selling oil is not making sense. Yeah, so need to consider that. If again, I don't think so that this event is going to spread and going to they are saying that there is a risk, all right, but I think that things gonna calm down, all right, and oil will keep dragging lower. So we got a drop on oil, right? This is index, and the index is telling us that the wheat is also going down. So wheat, let me check the wheat chart. So wheat even gone way lower than that. Commodity index, so need to find that. All right, so there we can see that the daily, so commodity index is still lagging behind that, while we can see that the wheat is very well ahead that, and telling us that the other commodities are also moderating in coming days. All right, so we broken below that previous low, but we are still hasn't broken below that low. All right, so we have clearly broken below that this previous low on the wheat, right? And this weekly correction which happened over there is ending below this previous low on this weekly time frame, right? And commodity index is still lagging behind that, and the reason why it is lagging behind that, because there is a higher portion of the oil within that commodity index. So we may see this to continue to keep dragging lower all the way back to this previous low, or similar like that. So I don't see oil going higher. All right, I don't see this commodity index going higher. I only see that this correction is just simply appearing over there, and after that correction we're gonna see one more leg lower. I mean, the drop can be slow, all right, this drop can be slow, may not be as aggressive as we are having here on wheat, okay, but the drop can be slow. But yes, we are looking for a drop. That's why in the previous in the recent updated chart, I was expecting a correction on the oil, all right, this daily chart, I was expecting, so correction has just begun over there on that daily time frame chart. We can see that the Friday close wasn't so aggressive to the downside, all right, and price managed to hold that sell off and then went into a correction. So previously we were expecting it to go down from that high 96, so started to go down from 96. Nice sell off just came over there in the previous week. And in the previous weekly market outlook, we were expecting this to break down, all right? I mean, price was there at this area, the previous weekly market outlook at 92. We were expecting that to break down, and these areas, watching these areas, and this trend to break down and continue to keep dragging lower or go back up for another leg. Now, I'm not anticipating this one more leg higher. I'm anticipating it to just keep dragging lower all the way back to the weekly lows as shown on the wheat chart, all right? And similar move on the copper to visit the lows as well. So oil is doing nicely, broken below that, all right, but now it went into a correction. So let me bring another chart on oil. There you go. Okay, so on Friday we were expecting it to go back into this daily correction. So very much similar like we are having on the copper chart at this right side. Right, so if you remember that, I have explained that in the previous weekly market outlook, guys, that the 61% retracement possibility on the oil, okay, the 61% retracement on copper dropped, and oil seems has done its weekly move up, and seems that the drop has just begun on oil. But like we have seen slow drop on copper, all right, so the copper drop was pretty much slow. And similarly, the drop can be slow on oil, all right? But right now, what is happening over there is just simply we can see that the correction is appearing over there, that daily correction, which is very much similar like on copper at this area. Okay, now that correction, we look at that lower time frame, how far that correction can go up to 92 or maybe 93. And once price going to start pushing more higher, we will start looking for this daily correction to break down, okay? Sell opportunity to stay intact, it shouldn't go above 95 areas, all right? 95, it shouldn't break above the 95, so should stay below that 95. So this is the chart, okay, which is you need to keep in your mind when you are looking oil to drop. Yeah, so pullback is just happening. Short-term buy opportunity is already happening as shown on this daily time frame chart. Yeah, but as I was expecting this correction to happen, all right? Now that correction has just begun, and this event, yeah, the war which has just erupted between Gaza and Hamas and Israel, that's causing that correction to happen, all right? That event. So yeah, so this is the war is the conflict which has just erupted, all right? So it's not going anywhere within 1 day or 2 days, so it's going to take some time. Yeah, until then we can see that correction to keep developing over there. It means that the short-term buy opportunity, and once price completed that opportunity and completed that correction, and things calm down, then we can expect it to break down. So yeah, that's your oil chart, all right? Oil chart. So people were talking about that, and oil gonna do the only exception for oil to spike up for upside, okay, something unusual, unusual move to happen. Remember, we are having higher interest rates, and oil price is very, very important these days for inflation to come down. For central banks, they are fighting with inflation. So the only exception you can expect oil to keep pushing more higher if situation like 1973, 1973 kind of situation again appears over there, which is less likely. Yeah, so when in 1973 we have seen oil embargo from Saudis and other OPEC countries, so they stopped supplying oil, and that was very, very bad situations at that time, so which caused the oil to keep rising for upside. So we are not having that kind of situation right now, but risk is there, as Many countries are warning over there that the Russians are warning and Germans warning. Yeah, they are warning that regional conflict can erupt. So if that kind of situation, develops over there, then obviously oil, is not a sell, right? Oil is not a sell. But right now we are, simply watching the structure and the formation, which is just simply over developing over there. All right. So that's that. Yeah, this daily correction to appear over there, and that daily correction to not break above that 95. So if it breaks aggressively above 95, means that the events which is just developing over there, okay, that's causing price to go higher. Yeah, hopefully you understand that. So oil, right? So oil chart is just simply going into the daily correction. Yeah, so why we are sticking to the oil to drop, all right, regardless of the supply, shrinking on oil, inventory is shrinking, oil inventory is shrinking. Wheat is telling us that where commodities are going in coming days, all right, and rates are biting these commodities, aggressively to bring down the inflation. So we are already having that one more leg lower. All right, on this is a weekly leg lower, which is just appeared over there on wheat, okay, and we are expecting similar leg on oil to happen. So we're gonna follow that. We are not going to follow the events or the or things which are just developing over there. So we're not gonna follow until there is a very unusual circumstances are going to appear over there. Yeah. So we are just simply following this. Okay, so we got one leg higher, then one leg lower. Okay, so you can call that ABC move. Right? Simply you can call that one leg higher, one leg lower. All right, and your ABC move. All right, we can see that the wheat aggressively went lower. Now we are simply expecting oil to go aggressively lower to all the way back to this previous low or breakdown. All right, so do you remember something, by looking at this chart? Hopefully you do remember. All right, do you remember this chart? If you remember the previous weekly market outlook at the start of the meeting in the previous weekly market outlook, I have made a very much similar comparison on two charts. All right, so let me try to show you from
I got paid
that previous.
Every single trader that's taken the FTMO.
All right, so hopefully you remember that this previous analysis. Okay, so we were expecting similar kind of move, similar kind of move on all right, so let's look at this. This is the previous weekly market outlook. All right, and I just need to go to the slightly forward to just let you know similar kind of analysis I made there on dollar yen and euro dollar last week. All right, so that's the dollar yen, and let's go slightly ahead. So there you go, the dollar index. There is the euro. Okay, so there is the I think slightly looking at the dollar. Yeah, there is the euro. All right, so there you can see that when the dollar was rising against the yen. All right, so and euro dollar and pound dollar, they were lagging, so there was the short-term opportunity for a 40 pip move for short-term and lower time frame. So I just want to go exactly to the there you go. All right, so this is what I was searching over there. So last week when dollar yen went higher aggressively, okay, and there was a sorry, let me open that. So right, so 40 pip move is just left over there to test that low. So price can tag that low. All right, so this short-term opportunity still can be grabbed. Let's listen this. All right, so how to confirm that trade is the question. Should I get into the trade now and look for this to continue to keep dragging lower? Okay, I need to look at the other dollar pairs, what they are doing right now. Yeah, so if I'm the first pair, you know, I'm gonna look as the dollar against the yen. Here we can see clearly that if I'm gonna go to the 1 hour time frame, let's just invert that. All right, and this has just simply broken down. Okay, it's just leading us that the euro also can break down this previous low. Okay, we got a pullback. Pullback started from there. Okay, went up to there. Pullback started from there. Okay, went up to there, and then what happened? The dollar started to gain against the yen, and the move is just simply this flag broken down. Very important stuff. Okay, now this flag already broken down and heading lower. Okay, we still got a room over there left. Like dollar yen is telling us that we already broke that low, right? This low, euro dollar hasn't tested that low, right? So you see that the dollar yen keep dragging higher. Okay, dollar yen keep dragging higher. Okay, this means that euro dollar still needs to break down this low. Okay, and that 40 pip trade still can appear over there. All right, this is the confirmation. All right, this is the confirmation which is just telling us that this still can drag lower. Hopefully you understand that. So euro still can continue to keep dragging lower simply. Okay, and once euro start, you know, it goes down all the way to this low, okay, and break down. Okay, you are looking price action as I have just shown you on the DXY. What I have shown you, go back up, test that top, and you're looking price action to counter it. Similarly, you're looking it to continue to keep dragging lower. Okay, test that low or new low. Okay, again counter trend move. Come back within the moving averages or the trend. Okay, if I'm gonna go to the 4 at. All right, so that was the previous weekly market outlook. Okay, and this is what has happened over there. All right, so price just simply followed. Euro went lower, broke the previous low, and then we have seen, you know, tremendous sell-off on the dollar against the yen for upside, and euro completed that move, and then euro started to bounce back. So this is you know, I'm just simply showing same stuff here again. All right, so this is the same stuff again, guys. Nothing new, like I have just shown in the previous weekly market outlook. We got a, you know, nice drop and sell off on the wheat. Wheat was dropping lower all the way. Oil went higher. Oil was lagging when wheat went higher. Wheat broken down that previous low. Oil started that move. Okay, oil is going into that daily correction which we were expecting over there. Right, might be like that, right? This correction which is just there. Yeah, this correction may be like this at this area, like this correction which we are having, which is seen on wheat, and we can see sell-off after that aggressive sell-off to the downside, or a slow correction. All right, slow correction like I have shown you on this chart. All right, on this copper. So so this kind of slow correction can also appear over there. So we'll see whatever, what kind of correction, is just simply appearing over there, either the slower, and which is going to take time, or the sharper one, which we have already seen on the wheat. So this is the same stuff, right? Like I have shown you in the previous weekly market outlook here on the euro dollar and the dollar yen chart. Okay, the example is just simply here. So that's the reason. This is the bigger time frame chart. We attempted shorting the oil earlier over there, but it didn't work. Yeah, so some short-term move appeared over there, and then the move happened over there all the way. So, and finally we got the move from that top. Sometimes, what happens, why you can say that why when you already knew that this kind of correction is going to appear over there, then why you were attempting to sell the oil so early. The reason is that we see pattern very much similar, very much similar, most of the time, but the problem is that sometimes these patterns are so stretchy and sometimes so so corrective. So that's where you wait and watch for the price action and just simply follow that. We were attempting those sells from there within these areas every time, and price was just going higher and looking for aggressive sell-off to come down. All right, and then finally we found that sell-off. This sell-off came over there, and then finally that sell-off came over there from that top and then started to go down. So the point here which I'm talking here is that the wheat chart, right? The wheat chart wasn't so stretchy, all right? While the oil correction is stretchy. Yeah. So there is the wheat, all right? And there is the oil. So we can see that the wheat ABC move, or this simple running flat, is not so stretchy, right? I mean, wheat started that correction from there to there and then reversed all the way up to 70%. Okay, this move reversed all the way up to 70% and then went higher, but that didn't happen here. Okay, oil went up and then this move did not came up to 70%. Okay, that's what we were expecting, and then the next leg appeared over there. So the oil was stretchy. Oil ABC move was stretchy. Okay, while the wheat move wasn't so stretchy. All right, the sell-off we have seen on wheat came up to 70% of this previous move, while the oil did not came up to 70% of this previous move, and then came up to only 38%, went higher, and then started to fall. So that's my point. Okay, now let's move on to the others now. So oil, very important chart. Yeah, this is what we are expecting on oil, to just simply do that. No, anything new. Yeah, so this is the 4-hour time frame chart, which is already going down. So euro, okay, update, it went lower, and then last week, the example I have just shown you here, what we were expecting last week, nice move, is just simply appearing over there on oil from the low. Update is there. Okay, we got a next leg lower, and then price bounced back and going higher. So we'll talk about what we can expect from the euro dollar now. So dollar CAD went higher, all right, and the update says that the price you are watching from that top. All right, so we are having some sell-off on the dollar CAD. Okay, remember, if things are going to get worse again in the Middle East, so we may see aggressive move for upside on the dollar CAD. So when you are selling the dollar CAD, make sure you understand that there is a risk. The higher the uncertainty going to be, the higher the dollar yen will go higher. Then your sells not going to work. So you need to consider that when there is uncertainty, dollar goes higher against the CAD. Right. So the dollar index, okay, the update we were expecting it to drop last week. We were expecting, dollar to just keep pushing ahead, test that top or breakthrough, and then drop. All right, so we got a sell off over there after having that one more leg higher last week. All right, and now we can see that the price is just simply setting up for another leg higher. Okay, we may see another push on the dollar index, another leg higher, like the chart is showing, the arrows are showing another leg higher can appear over there. So S&P 500, okay, so as said that at the start, we may see drop. All right, we may see another leg lower like we have seen on US Tel Aviv 35 index like we have seen over there. So let me bring a chart for the indices to let you know that what I'm talking about. There is a risk for one more leg lower like shown in the previous weekly market outlook for another leg lower on indices after this conflict. Okay, this is the Nasdaq 100 index, and Tel Aviv 35 is just testing that low, and there's a risk for the tech stock to also fall and continue to keep falling all the way up to 1050. All right, and also we can see that the yields are higher. The yields, US 10-year yield is at 5%, okay, which is not favorable for the indices. So indices can feel pain because of that. So there is a risk that the S&P 500 and Nasdaq 100 next day can fall too. But last week we were not looking for sell last week. Right, so last week we were sticking to the bullish sentiment. Right, if you remember that, we were sticking to the bullish sentiment on this daily time frame, and we have seen some strength. Right, not the ideal one, but we have seen some strength. So price managed to hold this low on this daily time frame. Nasdaq 100 index also held those lows, all right, and bounced back after going lower. So in the previous weekly market outlook, we were expecting this to go down, right? So we got that, tested, bounced back, and short-term buy opportunity appeared over there on the Nasdaq 100 index. So last week we were sticking to the bullish sentiment, all right, and on all these three, right, and we have some strength. But again, this chart needs to be considered, right? This chart, you shouldn't forget that chart. So that's the S&P 500, all right, and what else? Nasdaq also, right? So I think I haven't updated Nasdaq 100. Yes, updated. All right, this is the chart. So make sure you understand, you keep that chart into your mind, and there is also a risk for another leg lower. Bitcoin is doing really well, even during this risk event. It did well holding that low, and other indices or other individual stocks, they are also doing well. Okay, Amazon is doing well, but there is a risk for them to fall back. All right, fall back. So we'll talk about them too. AMD to fall back to very much similar like the Nasdaq 100 index chart. They are falling, but the move is very, very slow. All right, very, very slow. So yeah, now let's move on. That's the previous charts. Let's move on. Dollar index, as said, simple. 4-hour moving averages, price is still holding. Okay, so we still may see another leg higher. This is the bigger ascending wedge is just simply happening over there. Again, dollar index, we have just seen that chart. Okay, and we have just seen the update on the dollar index chart. All right, one more leg is likely can appear over there. All right, so I wouldn't suggest you to buy the breakout. All right, so buy the breakout opportunity can appear, you can try, but I wouldn't suggest you to do that. All right, we are still within that downtrend, and price, you're looking price to hold these areas and go back up. And when you are looking for buy, make sure you understand that there is a possibility for a sharp breakdown, and price can break down and can continue to keep dragging lower all the way back to the previous low. all right, like we are expecting oil to do. So we may see one more leg lower on this chart too, all the way back to the bottom. All right, so we can see breakdown, right, back to the bottom, and then price can, you know, test that low, and there you are paying attention at these area for another leg higher. So if it continue to keep rising, it has already tested that. You shouldn't chase the price, the trade over there. Now let this to push higher, yeah, and if test that low, test that high or form new high, very much similar like last week. All right, so from when higher high comes over there, you're looking for it to go down, very much similar like last week. Counter trend trade from the top. Okay, dollar index and euro dollar is also same, just opposite. 4-hour moving averages. All right, so one more leg is just simply appearing over there. You are looking at one more leg to complete all the way back to this previous bottom or new low. All right, this ABC move to just keep dragging lower. All right, so you shouldn't chase the trade there for this one more leg lower, as we know that we don't have any indication yet. Last week we do have indication over there for this one more leg lower. So in case if we do have indication, any other pairs lead us, then you can sell it over there at the current price. All right, otherwise, you know, once price has, you know, that trend line, then you're expecting it to continue to keep dragging lower, and from those lows, right, last, you know, previous weekly market outlook, we were expecting it to rise from the low. So similarly, price to test this previous low or new low and then go back up. All right, otherwise price to hold these trend. All right, that's that. It has already held that. You shouldn't, you may have missed the move. All right, then you are looking it to just break this low, new low, and then looking to counter it for upside. Okay, so on lower time frame, right now this is the place where you're paying attention. Either break down and test this low, all right, this area. All right, paying attention at this area. So break down, test this low, right, and then go back up or bounce off from here, right, within these areas. So bounce off from there and go back up. So I think we're not gonna see, all right, so we're not gonna see any you know, a price action over there for buyers. So better to let this, you know, this low to test it or new low to come. Yeah, as we can see that the dollar yen is still, you know, pushing more higher after, even there we can see that the dollar yen is just reversed. So yeah, so dollar yen can test that previous high. So wouldn't suggest you to chase the only look for new low on the euro dollar, new low or previous low if you're looking for buying. Sell opportunities just simply, you know, appear over there here, right? This opportunities for short term is appearing over there. So you shouldn't be into that trade from the middle. Same goes with the pound dollar. Okay, pound dollar is also pushing more higher and more lower. Okay, so last week we were expecting pound dollar to break down and test that low, right? This low, it broken, went lower and then bounced off. Okay, held that high for a trend and then start falling. So similarly, okay, as we can see that the dollar yen is pushing higher, so we may not see price action over there. Okay, the price can break down this low, test that low, or even can break down, then you are looking at to counter it like last week I have shown you. So you only can buy it if anything, you know, happens over there and very strong breakout comes over there, then you are paying attention for buy. Right now we know that the, you know, the uncertainty is just simply building over there in the Middle East, so selling the dollar right now is not making sense. Okay, and more likely you can see that the dollar will stay intact for this week if things keep getting more worse. All right, so which means that short-term continuation with the 4-hour time frame as shown in the previous weekly market outlook, if you remember that, which is already happening over there right now. Okay, trend is being held, and one more leg is, yeah. So the only exception you can buy in case very strong breakout is coming, which I don't see coming at the moment. All right, so what you are simply looking, the trend is to just simply continue. All right, price there, you are looking to counter it, or new low again, go back up within the trend, within the moving average. Remember, when you will go for counter the pound, okay, when you are going to buy the pound against the dollar, remember there is a risk for the sharp sell off on the pound, or crash to the downside if things get worse over there, right, in the Middle East. Then there is a possibility that the pounds, I mean, if things get worse, all right, then what investor gonna do? The only safety they're gonna look for is the dollar. So they're gonna go after the dollar. They're gonna stop, moving their assets into the dollar if war spread. So dollar is simply gonna be a buy. So there is no, we're not gonna get a sell on the dollar then. So when you're going to counter this chart for upside, make sure you understand that. But right now, very much similar structure like the previous week. All right. And another leg lower to happen, break the previous low or new low up to 19, and then bounce back and then counter. So Australian dollar also very much similar. We got a bounce off last week from the lows, and it is likely that the Australian dollar also gonna go lower, gonna test that low, and then you are looking into it has already bounced off, all right, and looking for it to go back up. All right, so structure is very much similar on 1 hour time frame, like I have shown you others. We got a bounce off. All right, so we got a bounce off, and correction is just simply happening. Price can drag lower within these areas, and this is where you're paying attention. If bounce off, looking for buy, go all the way, or test this low, a new low, and then counter again. If we see a problem in the Middle East, then this can extend to the downside. Same on the New Zealand dollar, US dollar. All right, so if New Zealand dollar, US dollar keeps pushing more higher, which I see right now that the New Zealand dollar still gaining even after having those news, then you are looking for trades comfortably. I mean, you're looking to sell the dollar comfortably. Right, so if the Kiwi keeps getting stronger against the dollar, okay, this is the place where I have shown you the price action, okay, up to this place. New Zealand may not test that low and can break out. If it breaks out, continue to keep pushing more higher up to that high, all right, then euro is there, pound is there, okay, Australian dollar chart going to be over there to buy, then you're looking to buy on the Australian dollar. So they're going to be good trades. If New Zealand dollar keeps pushing more higher, they're going to be good trades on the Australian dollar, chart. So yeah, it has already moved away from the lows. So you only can, from the current price, you only can look for a continuation trade. Okay, I wouldn't suggest you to look for this trade. It has already gone, all right, from this low. So you shouldn't chase this trade, as there is a risk for another leg lower up to this, and price can go back up after hitting that low. Then you are paying attention for this trade from this low. So don't chase that trade, or don't chase that trade. Only look for buying from the lows, yeah, within these areas, or if price struggle to go push more higher, then looking for sell from those highs. So there is no trending move. We are in a sideways market, and in case if we see breakout, okay, if this breakout comes, then you're paying attention on your Australian dollar chart. They're going to be the trade as just shown you, okay. Okay, then you're paying attention there. This chart is still at the lows, still struggling. If you see that this breaks out, okay, then this trade still gonna be over there. Yeah, up to this area, this trade still gonna be over there. Makes sense, yeah? So rather than chasing this, yeah, you're paying attention. This buy gonna be worthwhile. So hopefully, because this chart is still at the low, and this is pushing higher. So keep that thing in mind, rather than chasing that. So in case if we test that low, all right, this low, then very much similar like the New Zealand dollar chart, which I have just shown you here. If test that low, then you're looking for buy again from that low, right? This chart. Okay, like we did last time when it was at the low looking for buy, and then we got some buying over there on that chart. So that's the New Zealand dollar. Dollar Chief went higher last week. Okay, so the bigger picture is still we are looking Dollar Chief to just keep climbing higher all the way back to that high and on 4-hour time frame. All right, so 4-hour time frame price last week went higher. We got a next leg lower, but we didn't see price at this area. Okay, price was just simply pushing higher and then start selling. So price slightly can drag lower. Yeah, it can slightly drag lower, but this is the move we are expecting. All right, price to go back up, and once you see that the price is breaking this trend line, or right now it's holding, all right, and pushing higher. So this is the move you are looking this week on the Dollar Chief. Right, and on Chief Yen last week we were expecting it to go down, and we have a nice aggressive breakout opportunity, and a decent strong sell-off came over there after this correction. All right, price was heading towards that, and then again we got some buying or correction is just appeared over there. So again this week what you are looking is to just simply a similar kind of movement. All right, so price to just hold these areas or this previous high, and this current price and this ABC move to break down, and this leg are all the way back to this previous low. All right, so this ABC move which we are having over there, our price is just simply right now holding the moving averages. All right, and remember the gap is somewhere there within these areas. Okay, that might be a reversal gap if I'm not wrong, somewhere here within these areas. Okay, and that gap is still being respected and might be a signal for a longer term sell-off. So looking for it to continue to keep falling. Okay, very much similar trade gonna be on the Euro Yen. Last week we were expecting Euro Yen didn't, in the previous weekly market outlook, Euro Yen was here, I think, and then we have seen a sudden aggressive sell-off. So we haven't seen intervention last week, and right after that sell-off, the sell-off which we got on the yen pairs, all right, this sell-off, right after that sell-off there was rumors that the bank, the Ministry of Finance from Japan, they have intervened in the market, but later on it wasn't confirmed that they have intervened in the market or not. So still they haven't confirmed. All right, obviously if they have confirmed that, then the market shouldn't correct that much. So what has caused that correction? All right, what has caused that correction to happen? If I'm gonna look at the 10-year yield, okay, the reason why we are having that correction is the 10-year yield on Japanese government bonds, right? So it's pushing towards 1%, right? And Bank of Japan, they were giving funds to the banks, all right, so that they can stop buying bonds over there once yield push up to 1% and can hold that 1% upper band. So yield is moving towards upper band, all right, and Bank of Japan is having yield curve control, so they were supplying funds to the banks to intervene into the market to hold the yields lower below that 1%. So that caused the on 6th of October they were doing that, so that has caused the correction to go back up. So yield is pushing towards 1%, right? And before that 1%, we are having some decent sell-off on, we have seen some decent sell-off on the yen pairs, all right? But that didn't, Euro Yen did not fall all the way up to this low. We were expecting it to go all the way back to that low. and it has, you know, corrected back to that gap, the gap which we were having over there, and we are paying attention since last couple of weeks at this area. So got a sell off over there, got a sell off, all right, sell off, and then again price tested and got a sell off over there. So similarly, you are paying attention over there again on that gap. So price already reversed over there, all right. Now you are simply looking for this to break down and continue to keep falling, or go back up for another leg, all right, and test that place, that resistance, and then drop. All right, so that gap is still being held. So you're looking for this to go back up, and then drop, all right, or break down. So opportunity is already missed over there. You shouldn't be a seller over there. We have seen gaps simply, okay. You cannot chase that. When price was testing that, there was the possibility, but right now you cannot. I mean, okay, there we can see that we have seen a gap because of the conflict which has just erupted over there over the weekend. All right, that has caused the gap. So when price was testing, there was a possibility for short. But again, gap, you know, euro yen is gapping down every time and is coming close to the 158.50. Yeah, so these are the places where we need to pay attention closely for longer term reversal. And on top of that, policy divergence is just appearing over there, and ECB said that no further hikes. Okay, means that peak in policy rates. You only can expect rate to fall from here. And that's why we are having gaps over there. So if it goes back, test the high, you are looking it to go down from that high. All right, that's the euro yen. So shouldn't chase. I mean, there is a possibility that we may not see, and price can break down and continue falling if things get more worse in the Middle East. All right. So yeah, so late entry gonna be on breakout. So I wouldn't suggest you to do that. Only you pay attention at the top, and once price tests that area, then you are, you know, paying attention and looking to chase that sell off from the high. All right, for this trade, the euro yen and pound yen is also similar. We have seen sell off last week on the pound yen. All right, nicely across the market. It is doing that same stuff again. All right, this very much similar formation is just simply appearing over there. Breakdown, holding. All right now it's holding that trend, breakdown, and continue to keep falling. This low or new low, that's the trade. All right, and if it has that high, right, this high, then you are looking this area, this place, and continue to keep falling all the way back to this previous low. That's the trade, which we are expecting over there. Okay, if things get more worse, then yen is going to get more stronger. All right, so yeah, I'm not anticipating this one more like higher, so I'm gonna at the moment. All right, so I'm gonna remove that, and that's what you are looking right now at the current price. So pay attention at that place, and you're looking at sell off over there for this week. Dollar yen. Okay, we as I said that the strength on the dollar yen is slowing down. It was pushing higher, and finally we can see that the slowness of this bullish trend and some intervention, not from the Ministry of Finance or Bank of Japan, but other, you know, other participants. Someone has sold the dollar aggressively over there last week, right, and has caused that you know, a sharp move. So the big fishes, they are watching the dollar yen very, very closely over there, because they know that this is where we can see some, you know, intervention or maybe policy change. All right, so we have seen a tremendous, you know, sell off, and then again that recovered once declined by the Ministry of Finance, that they haven't done any intervention over there. Then people thought that let's just simply, you know, get out, and the price just simply went higher. Again, our correction just got bigger. So if I'm going to make it simple on this weekly time frame chart, okay, we are simply looking for a strong, a big dodgy candle is just appearing over there on the dollar yen. Okay, and if things get more worse in the Middle East, then the dollar, then the yen gonna be the be the chart to watch. All right, so we have seen strong a dodgy candle over there last week. Okay, this might be a sign. This dodgy candle might be a sign for the top is in place and then trend to the downside. So what you are doing on a lower time frame, so simply very much similar, like again, as long as price is holding the trend or the moving averages, the trend is still bullish, all right? And from the high, all right, from these previous highs, you are looking for a price action, this previous high or new high, and again looking for a similar kind of sell-off, and that sell-off to break out that wedge to the downside, all right? Or if price do not rise all the way back to the high or do not test that top, then you are looking, again intervention and sharp breakdown from the current price and continue to keep falling to the downside. So in other words, looking for this daily wedge to the downside. Okay, so even you can, I'm trying to tell you that watch price action from the high to get into the trade, and in case if you cannot catch that, then you can get into the market once you see that similar kind of price action is appearing over there and falling aggressively, entry stop, and then you're looking at to continue to keep falling to the downside. So obviously that move gonna drive some fundamentals. So we have seen sell-off on the CAD as well from the top, and we are looking, there is a possibility that the CAD yen still can go back up. If dollar yen goes higher back to the previous top, then obviously you're going to see that the dollar, the CAD also going to go higher, right? Okay, so we were expecting sell-off on it last week. We got some sell-off on it. Right now we don't want this to go back up. All right, we want it to just continue to keep dragging lower. But there is possibility for this to go back up at another leg higher. Yeah. So what you are watching is the dollar yen. If the dollar yen goes back up, then obviously you're expecting CAD yen to go back up, and you're looking from sell-off from that top. So you shouldn't chase the continuation trade for the downside. Okay, we don't have a sell-off opportunity at the CAD yen at the current price. Okay. So if this happens, let that go. All right, so let this push higher, and if test that top, then start building for longer term trade to the downside. Okay, this trade you shouldn't chase that breakout. This trade has already begun from there. This move has already begun from there. So if you're gonna start chasing this, you may get stopped out before getting the move to the downside. As we can see that the dollar yen is still pushing higher. Yeah, so if dollar yen goes higher, then obviously you're gonna see this to go back up to that top. Yeah, this short-term move gonna be over there then. So that's why don't chase that like, all right, like I have shown you on the, I mean, don't chase it from the current price. You only can chase it if it very, very strong aggressive sell-off is coming over there from the current price, as shown on the dollar yen. All right, so same goes with the Aussie yen. We got a sell-off on the Aussie yen last week. All right, it's a sideways market, big sideways market, very slow moving pair right now. All right, and we may see breakdown. All right, this breakdown. All right, so if that breakdown comes, I don't think so you should chase this breakdown. All right, this breakdown, you shouldn't chase that. All right, this flag can break down aggressively and can continue. So don't. All right, so oil price already started falling from the high. You should be into that trade, as I said in the previous weekly market outlook. All right, or let the price tag this previous high again. Okay, if tag that, then you are looking for these short-term trades like this, and the medium term and the longer term trade all the way back to this previous low. All right, so first is this from these highs, this target. Okay, so same. You're only looking to sell these currencies from the high, the Aussie, the Kiwi, the CAD. All right, and all these, they are trying to hold the top right now. So same goes with the Kiwi yen, holding top. Last week went lower, going back up, and you're looking at to push slightly more higher, and then you are looking at to sell, all right, or strong breakdown from the current price if that appears then. So this wedge to go down from the high. So euro pound is very much similar like last week. We haven't seen movement on this chart since last week. Price was just sideways, so I'm gonna ignore it. Okay, again, if things get worse, it will break up for upside again. Things get worse again. I mean, if conflicts is going to be regional, okay, we can see breakout and it can spike up very, very aggressively. Oh. And in that event, so we can see that the pound chief gonna go lower. So right now, yeah, so similar like last week. So pound chief is trying to fall, trying to break through this low. What you're watching is the previous low. Okay, if it bounce back, breakdown is possible. This daily sideways market can break down or the downside. So you're paying attention again at this low. If you get some price action, then short term buy and go back up again. Uncertainty will not push this pair back up, and if uncertainty get more worse, then it will continue as chief gonna start playing as a safe haven. So very much similar like last week. EuroCAD. Okay, again, if uncertainty get more worse, then EuroCAD is not going to drop to the downside. Right, so uncertainty means the safety. Okay, so safety going to be the euro, then CAD is not going to be the safety in case if war is going to erupt into the other part of the area of the Middle East. All right, then we're not going to get this one more leg lower, then we're going to get a sharp move for upside. So I'm not anticipating that. As I said earlier, I'm anticipating that things going to calm down. And last week, what we were expecting this to go down. So this week you are expecting it to just fall, test that low, right? It broke out slightly, went higher, and then again started to struggle to push more higher. Yeah, if price is already trying to break down, so you're looking at it to hold this area and then to continue to keep falling. Same goes with the CAD chief. All right, so CAD chief to break up for upside. All right, so as we can see that the CAD yen is pushing more higher. Okay, so CAD is pushing higher, CAD yen, but the CAD chief is pushing lower. So last week we were expecting CAD chief to go higher, right? But we have seen slightly extension to the downside. I mean, price slightly went lower below the moving averages. So what you are simply looking for a breakout. If breakout comes, then you are looking for this breakout. Okay, so breakout comes, you are looking it to continue to go higher. If breakout doesn't come, do not jump into the trade. There is a risk for this to go all the way back to that low and then again buying. So only breakout. I'm still expecting similar move like last week. So in the previous weekly market outlook, we were expecting it to push more higher. Yeah, this is our leading pair right now. This is leading us that what kind of move we are going to see. So this is telling us that things are going to calm down in the Middle East. Yeah, things are not going to be regional or something like that. So risk is there. But so last week we were expecting it to go back up and then fall. Let me find that chart. So as long as you see that the pound keep falling against the New Zealand dollar, means that the risk on trade still gonna be over there, or the trades which I have shown you, we're gonna get those trades. And there you go, on the last weekly market outlook. Okay, so we were expecting it to go back up and push up to that top and then start dropping over there. So we are having, you know, some decent. There you go. All right, so we got one more push up, price, you know, tested that, and then it's falling after having that move. Okay, so it's going down, and we're expecting pound New Zealand dollar to hold that trend and continue to keep falling at, first of all, this previous low up to 2.03, and if it is going to be aggressive, then all the way up to 196 areas. Okay, so it's going down and we're expecting pound New Zealand dollar to hold that trend and continue to keep falling at, first of all, this previous low up to 2.03, and if it is going to be aggressive, then all the way up to 196 areas. 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 Okay, now this move is just simply happening over there, is telling us that the New Zealand dollar still needs to gain across the others. So it's a good sign simply, right? So what you are looking is that the pound to break down that low, right? If pound breaks down that low, then the charts which have corrected this move, okay, some of them like EuroCAD, CAD Chief, right, or other pairs which have corrected back to that, so they also set to drop and set to break down that previous low for that next leg lower. So right now we're expecting pound New Zealand dollar to continue to keep falling all the way back to this previous low. All right, we'll see how far it goes. Okay, but expecting it to go all the way up to this low. All right, so the lower this chart goes means that the trade are still there where we are having that correction. All right, this correction. This chart is going down, all right, but this chart is still holding. Yeah, so last week we were expecting this chart to do the same, the pound New Zealand dollar to do the same, so it has done that, and now the trade is just simply appearing over there. Yeah, so yeah, once you see that this chart hit the lows, same technique or the same point which I have just shown you on this area, this euro dollar chart. Yeah, euro dollar chart. So our copper, our wheat and commodity index. So we can see that this is breaking down, testing that low, all right, and this chart still has to take out that low, cross line there, cross line there, cross line there, cross line there, and it's leading, right? And then this chart is leading, and this chart is not leading us yet. I mean, this chart is not following the, pound. This chart is simply telling us that the pound is getting weaker and New Zealand dollar is strong. New Zealand dollar is a risk on currency, so this trade is still there. Okay, so similarly, pound CAD, very much similar like the CAD, Euro CAD, all right? If you see that the trade is just simply still there, guys. I think I don't need to talk about that again. So it's going to be, so yeah, this is the move you're looking for. Simply go down, test that low. Okay, so Euro CAD is pushing, Kiwi CAD is pushing higher, and Kiwi CAD to just keep pushing more higher. And this is the bigger structure. Daily trend is still coming down over there. And one more leg lower is still possible on lower time frame. Continue the trend for upside, and as long as last week we have seen correction over there, and we were expecting it to continue the trend for upside, and it has nicely held that trend from these areas and reversing, and if it tests that low, this area, okay, then this trend to continue to keep pushing more higher. Short term going to be this high in this move, and the next leg to just continue to keep pushing more higher. All right, so where you're paying attention is here. They're going to be the trade. If Kiwi CAD keeps pushing more higher, there is the trade. You're looking for a short-term buy opportunity here in this area. So at the current price, this is not a best place to just jump into the trade. All right, yeah, so this is not a worth, I mean, it may test or may not test this area, this low. Yeah, and can continue, but I will suggest you to let the price give you a complete nice formation, this support area, and then you are looking this trade. If it doesn't test, then let that go. You should be into the trade from the lows. All right, so these areas, remember, if EV keeps pushing more higher, then this is the trade. Okay, but these are the areas where you're paying attention for long. If it breaks out and continue to keep pushing more higher, I wouldn't suggest you to chase that trade. You can buy breakout, but it's not gonna worth it. You may get stopped out. So similar, yeah, similar analysis like last week. We were expecting this to break down. It's breaking down, coming closer to these areas, and you're paying attention for long here or here within these areas, or in best case scenario at 103 for longer term. Okay, this is just a daily chart analysis. So euro Oz is very much similar trade like pound New Zealand dollar or euro New Zealand dollar. All right, so last week what we were expecting these charts to go back up and form the expanding triangle formation. We have seen expanding triangle formation on them, and then they start falling. A nice move. It's just simply appearing over there. Okay, so euro New Zealand dollar is very much similar like the pound New Zealand dollar. Tested that and heading towards this low, you know, falling to the downside for the next leg lower. Similarly, you are, watching these to 6 charts. Right? These are 6 charts which are very much similar. 8 or 10 chart, not 6, 8 or 10 chart, which are very much similar like each other. Okay, so short term, there was a short term trade we were expecting from this high that has already almost appearing over there and about to tag the target, okay, within these areas. So sell from there within these areas, short term target there. So the trade gonna be here, okay, and you're looking for euro New Zealand dollar, which is already gone down. All right, this chart, all right, so this chart, the trade is already pushing lower, so the short term target and medium term target going to be much lower. So once you see that this is breaking down, and this breaks down this low and heads lower, yeah, and this chart is still holding, so this is going to be the trade. All right, that's going to be the trade. So chief going to be the euro New Zealand dollar is already heading lower, so very much similar like the pound New Zealand dollar, continue to keep dragging lower all the way up to these areas. So in case if price is going to test the moving averages and holding the flat formation possibility, simple, okay, this like that, test that low, go back up and flat formation, then again keep trending lower. Right now the next leg is just simply appearing over there, breakout is just happening, price is just pushing lower. So Uzi chief gonna be the opposite. All right, so if I'm gonna invert that chart, this is, yeah, Uzi chief or Kiwi chief, both are opposite. So break down and test that low. All right, so these areas, and hold that and continue to keep pushing higher. So Kiwi chief is also same. All right, so if I'm gonna open euro New Zealand dollar again on this side, and we can see that this is dragging lower and it's about to test that low, but this chart is still stuck somewhere within that correction. Okay, very much similar like that correction, stuck, and it's breaking, heading towards that low, but this chart is stuck. So this is what you are looking on the Uzi Kiwi chief. Yeah, this chart still heading towards that low, but this chart is still stuck within the moving averages. Same trade, both are same trade. So as long as you see that the euro New Zealand dollar is keep falling against the New Zealand dollar, and Kiwi chief is still holding the moving averages, and the trade gonna be over there. Same trade, all right. Yeah, this chart inverted. So dollar rand is simply, at the high. Yeah, it's not worth taking to trade on the dollar rand at the moment, so I'm going to ignore that. So dollar Chinese yuan, very much similar like last week. Yeah, so we still may see another leg higher. We know that there is a lot of things going on from People Bank of China. They are trying to push their currency higher, and the intervention is just happening, but not working yet, and it's struggling over there. We still may see another leg higher within that wedge, like dollar yen, before going to continue to keep dragging lower. You're paying attention at these areas, okay, this place where it is struggling, and looking for these short-term trades, all right, these short-term trades. And if it fall aggressively, then go up to 7.18 or 7.15, where the People Bank of Canada is, targeting the exchange rate. And this is the chart, all right? So as shown in the previous weekly market outlook, let me bring that chart again. I have already shown you that last week we are having tremendous divergence. All right, and there is, I think I have explained that, if I'm not wrong. Okay, no, this is the, there we can see that the trend since 2000, all right, so bullish trend, and the dollar is just keep rising against the rand, all right, and testing this previous high. But what happened is the peso just went opposite, and now peso is trying to catch up. So this gap or divergence, which appeared over there, is caused by the policy, all right. And what policy is saying, I think I have explained that. The policy is saying that the inflation is falling. This orange line is Mexico inflation, all right. So inflation dropped from aggressively somewhere close to the exact number somewhere there. Yeah, I don't know the exact number, right? But I can see that where it is right now. So inflation is at 4.64, heading towards 2%. All right, and the currency we can see over there is also, currency was gaining, peso was gaining, dollar was falling. Why it was happening? Because the interest rate, the red line, okay, the red line was spiking up very, very aggressively. So the interest rate is at 11.25. Now inflation is sitting at 4.64. Interest rate is sitting at 11.25, okay, and peso is at strongest level since 2018, all right, so 2016 we can say that, 2018, 2017, yes, strongest level. Now this is going to invert. Yeah, what is going to invert mean? I mean, the inflation is falling, interest rate is so, I mean, it is in a extremely strong territory, tight territory, and we only can expect interest rate to stop falling from there, from that peak, like we have seen here at this area in 2019. Yeah, interest rates held the whole interest rate for a couple of times, start cutting, then we have seen an aggressive spike over there on dollar against the peso. So similarly, interest rate gonna drop, start falling, and we're gonna see banks spike up over there on longer term, and the policy gap, which is just over there, they're gonna go away. So that's a longer term picture, right? And that's why any correction you see there, right, you're looking for this to break out. And remember, when you are buying this, when you're buying the dollar against the peso, your holding cost going to be very much high, so swap cost going to be very high, so consider that as well. So price to just pull back within the moving averages to hold, breakout, and continue, like these legs which are appearing over there, these legs to appear. Euro chief is heading towards the low, all right, and the short-term opportunities, you're looking there, heading towards that previous low and looking for a buy, short-term buy opportunity within these areas. It has that low, this area, hold that, short-term buy, and longer-term breakout for upside. Okay, so US 30, as said, that we still may see one more leg lower all the way back to this previous low. Okay, so again, very much similar analysis like I have made earlier. Yeah, we still may see one more leg lower, like we have seen on the Tel Aviv 35 breakdown, and there is a proper risk for breakdown and continue to keep dragging lower all the way back to that low. So if you are looking to buy, yeah, make sure you are careful, okay, and very how to manage your position in case if price keep pushing higher, then you are staying in, and if it doesn't, then getting out. So during the New York session, yeah, so paying attention here, It may break down. It may break down, as I said that the risk on sentiment is not looking good, right? So short-term move, if it keeps pushing higher all the way back to the high, yeah. If it doesn't, continue, okay, and sideways market start appearing over there, then fall and go all the way up to the previous low. Okay, moving averages are coming over there. 4-hour moving averages are coming over there, and price hold those moving average, that trend, like you can say that this or like this. Okay, if that holds here at this area, then continue to keep falling to the downside. So the risk exists over there for another leg lower, guys. Yeah, that's the formation. So Nasdaq 100X is also similar. Okay, so if Nasdaq, if US 30 draw, then one more short-term sell-off opportunity. This trade during the New York session breaks down, stay in. If not, then one more leg higher. Okay, do not chase this move from the current price. Oh, that makes sense. The S&P 500 is also same. Okay, bigger, one more leg lower can appear over there. This 4-hour time frame. Let's pull out the moving averages, the trend. Okay, so we can see that the trend is still holding on this 4-hour time frame for the downside. Okay, and this is what we were expecting last week. Short-term buying appeared over there. Okay, this area, this place. Okay, not buying above this. All right, so pay attention at this area. If US 30 keep falling, then this is the trade, short-term sell opportunity during the New York session. And from this area, if breakdown all the way back to the bottom, if not, then go back up. All right, not buying for this at the current price. Okay, what I'm anticipating is the drop on US indices during the New York session throughout the week, as we can see that the risk sentiment is not good. So do not buy them at current price, specifically the S&P, any assets. All right, any risk on assets, like individual charts as well. Individual stock charts, they are not looking good. So we may see one more leg lower, as said on this daily chart. Yeah, and also this is confirmed by the small caps. Small caps are very much struggling. So we were expecting small caps to go higher, divergence to play out at this area. Okay, it didn't, so it went lower and testing that low. So possibility exists over there. Okay, what you are looking for on the small cap at this previous low. All right, paying attention at that low. So they can drag lower and they can test that low, and we may see some buying over there. All right, test that low and bounce back and then go higher. Simple. Not trading at the current price. You're only looking for it to tag that weekly lows and then go higher. Right, and the European indices also set to fall. As I said, that there is a risk for them to continue to keep falling, so don't chase them. So we may see, yeah, in the previous weekly market outlook, we were expecting short-term bounce off opportunities there. We got some short-term opportunities, okay, on the lower time frame, but we did not see this area price did not tag that area and then started to fall. So now we can see that the price can continue to keep falling, guys. So ignore this move. Okay, we may see all the way back to this area, that place. Not buying. Okay, so should you start looking for sell? All right, I wouldn't suggest you to short the indices. All right, in case if something very unusual thing happened, means that yeah. So wouldn't suggest you to chase the indices. But if you still want to chase that, then you need to pay attention on your lower time frame. Right, and every correction which is just appearing over there, you're paying attention on these corrections. Okay, so how you can do that, how you can trade on the indices for the downside, right? So watch every assets, every risk on asset, all, I mean other major indices. If other major indices are falling, all right, then you can trade which is not falling. You can trade on that which is just lagging or behind that. So you pay attention at this area, all right? The trend is just coming over there, and this one shot, one more leg lower, an aggressive move comes and then continue to keep falling over all the way up to the previous, you know, low at this trend line on the daily time frame. That's how you can trade on them. So it's a bit tricky and risky to sell the indices. So when you are trading on them, I don't suggest usually to counter the indices for the downside. But if you still want to trade, yeah, you can trade by your own. Okay, same goes on the Euro Stock 50. Okay, so we may see this leg lower which has just started from the top, similar like, you know, others on 4-hour time frame. Okay, Frankfurt is also same. We may see a drop all the way back to this previous bottom. Yeah, 4-hour time frame moving averages. Prices just simply, you know, struggling to push more higher and setting up for a correction, similar correction which I have just shown you. So they can drop. And the UK 100 index also set to fall. So once UK 100 index tests that low, UK 100 index is very, you know, in a sideways market. So you see that this test low, all right, then you're looking for a buy opportunity. Ignore this. Not at a good spot to trade at the moment, we can say that. So Nikkei index also can drop all the way back to that low, all right, and ignore this, all right. So breakdown will also give you opportunities on the yen pairs, so where I have shown you the trade. Okay, ignore this sell, do not sell it, all right. Bank of Japan manipulate that index, they buy ETFs which cause that to go higher. So gold, all right. So gold, last week we were talking about the gold that you only can look for it to buy if you see that the sharp move is coming over there, all right. So sharp move came over there on Friday on silver. So you got a sharp move, and which was a signal that the gold also going to push higher. So you gotta you know, jump on silver, and after some time or silver jumped first, all right, and went higher, and then gold was holding there, and then boom, gold went higher. So the analysis is very much simple, guys, like last week, right? So you know, uncertainty is over there, and gold went lower. You're simply looking for gold to buy. That's it, all right? The lower the gold goes, you know, give you an opportunity to buy simply, specifically during these events. Okay, now a price just simply bounced off. Okay, last week, you know, as I have said to you, if it tests that low, all right, then you are looking for buy on gold within these areas. So it just simply bounced off from that low nicely, all right. So it held that 1800 area, 1880. So what you are simply looking in the trade you are looking is it to go back up, right? Now here is the point to note and to remember. The point is that the yield, okay, the 10-year yield still pushing higher and set to hit the 5%. We have seen some, you know, weaknesses on the yield last week, which caused the gold to go higher. Okay, this move, yield removed all those losses, you know, during the non-farm payroll number, and then again started to fall. And there is a risk that the yield can tag that 5%. So if yield push more higher and go up to 5%, all right, then gold can test the 1800 area again. Then continuation trade is not going to work over there on the gold for upside. And the other thing is that as long as you see that these currencies are not breaking higher, okay, this area is not being held, not breaking, going down, all right, breaking this previous low as shown, and new low is coming, gold will also break the previous low and continue to keep falling before going to go back up, before we're going to have that continuation. Okay, what I'm going to show is that the continuation trade here at this area, okay, continuation trade and breakout and go higher. But what I have shown you on other dollar pairs, okay, one more leg possibility is appearing over there, all right, one more leg and then higher. So this possibility still exists over there on gold for one more leg lower. So what you are watching simply is just go to your lower time frame, Yeah, so war risk is there, and correction is just simply happening over there. This might be a gap, and gap up happened, right? So you are simply looking these areas to hold, all right, and looking for this to break out and continue to keep pushing more higher. Short-term target going to be that, and bigger time frame target going to be much higher, right? In this area, that high. Oh, that makes sense. So that's your gold, and silver is also similar. Silver also bounced. Silver did not hit that low exactly, all right? So yeah, exactly, didn't hit that, bounced off. So just go back up, silver. All right, so hold these areas, go back up or test this low, and then again bullish. Okay, so Bitcoin still holding, and Bitcoin to just keep climbing slowly higher all the way back to that high. All right, so this chart we have seen earlier. So holding, bounced off, and continue to keep rising. Okay, so correction happened, but very slow rise. All right, so hold these areas and continue to keep pushing more higher. Okay, so Ethereum is also similar. I'm going to ignore the Ethereum. Yeah, BNB is also similar. I'm looking for buy on the BNB from the lows, guys. All right, and oil, as I have explained to you guys previously, that the simple analysis which I'm going to make here is that the $92, right, or retracement of this move, which is just appearing over there, all right, that retracement to hold. I'm going to ignore that. I'm going to ignore these areas, these trend structure. Okay, so just pull out two possibilities. One is the copper and the other one is the wheat. Okay, so first wheat, and we have seen a pullback on the wheat there. Right, these two possibilities. We have seen a pullback over there, this or that, and then price again start falling. All right, so similarly, this correction is started to appear over there. All right, so if I'm going to pull out, fib lines and a rectangle, it retraced up to 38%. It has already retraced up to 38%. Okay, but the more likely one, gonna be the copper, right? So the copper one, but this possibility, breakout can happen like this. Breakout can happen sharply to the downside, and it can continue to keep falling like this, or breakout to the downside like that. Okay, so the worst case scenario gonna be the copper. Okay, the worst case scenario gonna be the copper, and copper extended up to 61%. All right, so the copper extended up to 61%, this earlier move. Right, so these two possibilities you should keep in your mind, that this pullback can go all the way up to 61%. Okay, which comes somewhere 90 or 92 area. So So before we are going to see a continuation move to the downside like that or like that. Okay, so these two possibilities. So what to do on oil? Okay, so moving averages to hold, simple analysis. All right, so once you see that the price is going to test these 4-hour moving averages wherever they comes. All right, so either they come at 61% or 38%. Yeah, if it starts struggling over there at the current price, okay, at this area, so you're paying attention over there, or ABC move appear over there like that, right? Another leg happened over there. So these moving averages too, so wherever this red line come over there, okay, so this red line to hold and next breakout to happen and continue to keep falling. So simple analysis. Yeah, so the moving averages to hold, that's it. The 4-hour moving averages to hold on oil for the trend to stay intact for the downside, okay, rather than making it complex, this area or that area. So correction has begun. The correction which I was talking about has just begun. Okay, daily correction. So natural gas was really good, so it bounced back aggressively, go higher. And if things get worse again, so natural gas is not going to fall anytime soon. Okay, but what you are looking is just simply natural gas to drop, right? So I have told you, when it was there at these areas, yeah, that the natural gas was a buy for longer term. These areas, all these moves nicely appeared over there a couple of times, right? 4 or 5 times. So yeah, so we may see again a sharp sell-off over there from the high. So it's not ready to sell right now, but yes, it is not going to sustain these moves. The current trend for upside again going to be a buy from the lows. But yes, we may see drop on natural gas again from, if it goes to 4, okay, then 4 to start falling from this 4 area. If it rises to $4, there might be a sell opportunities on natural gas from the 4. Yeah, it may test that 4 or may not test that 4 and can start falling. All right, then you need to watch a price action over there for countering that sell on the natural gas. Very much similar, like that kind of price action is required over there on lower time frame before going to counter it. But yeah, point here is that the buy was there, buy already happened. So if you keep eyes on it and price starts struggling over there, then you can counter it for the downside. Okay, right now we don't have a price action, but it can appear over there later on. Keep eyes for countering it for the downside. Okay, so the individual stock, I mean the Apple is also similar, like like I have shown you the indices like Nasdaq 100 and X. There is a possibility for one more leg lower all the way back to that low before we're going to see trending move or upside. So again, for short-term buying, it's okay. Once you see that the comes there, similar analysis, all right, like I have made on the Nasdaq 100 index, these areas holding, go back up, all right, or 4-hour time frame is still holding to the downside. Yeah, 4-hour time frame is still holding one more leg lower, and risk is there for total crash or one more leg lower all the way back to the bottom or the bigger daily time frame, like I have shown you on all these, not just on one. Okay, on all these we may see possibility for these big names to go down, okay, up to this previous low. So yeah, Nvidia is pushing higher after testing that low, and this is also pushing higher, but there is a risk for the triangle formation. Okay, that's my point, like this, rather than going to continue to keep pushing more higher. Okay, so as said on the Nasdaq 100 index, stay bullish, okay, for the lower time frame, short-term buying, and need to adjust that, right? And if they start rising aggressively for upside, bang, stay in. If not, then take out, then again come down and test the previous low, and then you are paying attention over there. So right now it looks like that it's breaking for upside, and I don't think so it's a breakout from upside. Yeah, I see it for one more leg lower. and then again we may see, you know, some buying momentum can appear over there. All right, the same on Google. Google also can drop, right, in this triangle. All right, so Amazon is also similar like that. They're struggling, so we may see another leg lower on these in that triangle. Or we're gonna have one more leg. I'm buying over there. So simply turning, you know, we can see that, guys. I'm simply turning to neutral or bearish. Okay, so bullish sentiment is not there on the indices at the moment. Neutral or bearish. Yeah, you only can counter them for short-term buying. That's my point. Okay, so enough. Thank you for the week, and hopefully you have enjoyed that. The crypto market is really slow these days. Okay, so the opportunities, you're gonna see the opportunities which I have just shown you are forming on Australian dollar and New Zealand dollar pairs. Okay, they fall within these areas. There I have shown you the opportunities within these charts. These charts are forming opportunities. All right, and these charts have already, you know, formed last week, and on Friday they bounced back, right? And also yen pairs, you know, they drop from the top where we were expecting them to drop last week, so they have made their move. The opportunities are forming on these pairs, so keep eyes on those pairs. You may get some good trades on them for this week. Okay, so thank you. We'll see you back again in another weekly market outlook. Until then, bye.